All right, thank you for your patience. Good morning, everyone. Good morning, ladies and gentlemen, and welcome to the Investors Blueprint webinar 2024, where we chart your path to financial success. This was brought to you by Quantum Zenith, and I'm your host, Mary Jane Chinoso Ezurike. Before we dive into the event, I just want all of us to mute our mic and we can ask questions after each speaker has given their presentation. So I'll call on the first speaker, Olani, to come and tell us about investments and how to make it in the stock market in 2024. Thank you.
Okay, Mary Jane, good morning. Good morning, everyone. For those of us that don't know me, let me show my face, even if it's just for 2 seconds. So welcome once again to our webinar. Essentially the whole idea is just like my colleague had said, let's help you chart out your financial blueprints for the year. Let's help you make wise investment decisions for the year. So that's why we are here. We won't take much of your time and we won't go too much into technicalities. We'll just do the basics and tell you where you can put your money for the year 2024. Okay, so Gina, so next slide, please. Okay, so the ABC is about investment. So basically the first question is, what is an investment? As it said on the screen, an investment is an asset or item acquired with the goal of generating income or appreciation. Appreciation refers to an increase in the value of an asset over time. When an individual purchases goods as an investment, the intent is not to consume the good, but rather to use it in the future to create wealth. It reminds me of a joke I used to make with my colleagues way back when we were young. We say, don't eat all your future. When you collect your salary, don't eat all your future. Make sure you have plans to invest. The beautiful thing about investment is that it goes beyond physical assets, even your time. Even you coming to spend 30 minutes with us here is a form of investment because you are looking to gain knowledge that can help you in the nearest future. I remember there was a time it was trending on social media, projects Mbappe, when people saw how much Mbappe was being paid, and there were videos of people putting their babies on the floor and giving babies football boots and soccer boots and football and say, look, you must play football so you can make money. Yes, it was comedy, but it's the truth. That is an investment. Next slide, please. Okay, so key takeaways. Like I said, investment involves putting capital to use today in order to increase its value over time. So what that means is you take money from what you earn today, you keep it aside in assets that you know that in the future can, give you more income or, grows over time or appreciates. It can refer to any medium or mechanism used for generating future funds. So we're talking about bonds, stocks, which are what we are going to really talk about today, real estate or alternative investments. Investments usually do not come with guarantees of appreciation. The only probability of anything being won in this world is death. So nobody is sure of tomorrow. But if you do enough research and you take your time, you can actually, mitigate against such risk or reduce such risk by taking informed decisions. So investment can be diversified to reduce risk. Although this may reduce the amount of your earning potential, yes. So there are situations where you balance, let's say a portfolio, one is not doing too well, one is doing too well. At the end, augments and it reduces the loss. And these are some of the things we are going to put you through today. Next slide, please. Okay, so we'll now come to our own market and the products we talk about. So type of investments, we have stocks, the equities market, the shares. We have bonds. We have mutual funds, which my colleagues will talk more about, Jennifer. We have real estate and we have commodities. Now, I'll just take the part of the stock market. And okay, so the stock market is a market where buyers and sellers can come and meet to exchange shares of public corporations. The truth is, once you buy a unit of a particular stock, you are a shareholder of that company, whether you like it or not. And you are betting against the fact that you hope this company will grow into the future or they will make more money. And so you are willing to take that risk of investing in a company. It's like me coming to meet you to say, let's start a company, and I give you 1 million and you put 1 million. I will obviously be hoping that our company can grow from 1 million to 3 million and you can pay dividends. So that's the same thing with when you're buying stocks. The only difference is that with the stock market, the market gives you an avenue where any reason whatsoever you want to exit your investments, there should always be a buyer on the other side or a seller on the other side, and that's the advantage the market gives you. So we know about the NGX. For the past 1 year, the market blew up. After the elections, the removal of subsidy, government trying to regulate FX. All this has sent good signals to the market, and a lot of investors came into the market, which is a good one because they say the stock market is the barometer that that shows how good the economy is doing. So for a lot of people showing interest in the stock market, that's actually a good one for Nigerian companies and the Nigerian economy, as it is. As at a week ago, our stock market was 56 trillion naira in terms of value, and the market, the all share index crossed 100,000 points. So this also sends good signals, and I think early this year, from January to now, we are the best performing stock market in the whole world. We've done about 36%. Even the information on Dangote Cement alone and the First Bank, Otedola becoming chairman, had skyrocketed took our market to new levels. Major, next slide, please. Okay, so like I said earlier, it simply means ownership of the company. When you purchase stocks, even if it's 1 unit, you become a shareholder of the company. So you basically purchase stocks for two reasons: for value and for growth. When I say value, that means you purchase a stock, you believe a stock should be at a certain level, but it's underpriced. And you know that with time, with economy being good and the market favoring the company, the stock should get to its real price. I'll give an example. MTN is trading at 290. Airtel is trading at 2,000. For me, it's only a matter of time. They do work. They're in the same industry. MTN covers about 39% of the telecoms market in Nigeria. Everybody uses data. I mean, as we're all in this meeting now, we're using data. So everybody uses data, and I'm pretty sure almost everybody somehow, somewhere has MTN. Yeah, an MTN account somewhere or, line. So as a value stock, you buy MTN and you believe that, with everything being equal, at a point, it should get closer to Airtel or they should converge somehow. So that's an example of a value stock. While the growth stock, likes of the Zenith Bank, GT Bank, where we know that, look, these companies report 100 billion naira PBT. We hope that next year they do 200 billion naira PBT and you can get good dividends and capital appreciation. So those are like the two major reasons. And the illustration I put down here just shows how the stock market works. There are people who want to trade. That's you try to buy at a low price, get out at a higher price. That's called capital appreciation. And there are people who buy for dividend sake. Now, for those who buy for capital appreciation, they are professionals. They call them traders because, look, some days you win, some days you lose. You have to be at a professional level, just like people who do FX and crypto. Meanwhile, the other one when you do for bonds, do for dividend accumulation, you buy stocks, hoping that you can get them at good prices, so that your dividend yield can, be like, be really okay, like 10 to 12 to 13 to 14%. And so most people normally buy banking stocks, Zenith, the BTAs, the UBAs, the Stanbics, because their dividend, they pay out. Their dividend payouts about 10 to 30%, which, for our economy is not too bad. Looking at mutual funds and what T-bills are doing, so that's just an illustration. Next slide, please. Okay, so I also talk about the bond. A bond is a fixed income instrument. So essentially, it's like a loan. It's like I'm coming to meet you to say, you know what, borrow me 1 million naira. I'm giving you 10% for the next 5 years. The beauty about investing in a bond is that your capital is assured. More often than not, you will get your initial investment, and what your returns will be. So it's safe. The difference between a bond and shares is that shares, the loss is unlimited and the gain can also be unlimited. I'll give an example. When they at the point when dollar went 700 and all of that, people dumped any bank shares. It got to 18 naira. 3 weeks ago or 4 weeks ago, Zenith got to 48 naira. So people who had invested in Zenith at that time had made like a 30 naira return. All things being equal. So basically, bonds are safe, but your returns are limited. And I did an example there. If you buy a bond, if you purchase a bond 15% for 5 years, I just did a table which shows what your returns will be over 5 years. Next slide, please. So a mutual fund is a pool of money managed by a professional fund manager. It's a fund that collects money from a number of investors who share common interests and invest the same in equities, bond, money market instruments, and the likes. So mutual funds, just like the explanation, it's a pool of investments where the fund manager buys different instruments and put it together, and people can invest in it. It's actually a good one because one, it caters to retail. Two, the returns on it is higher than what any bank will give you. But you put your money in savings accounts in the bank, you're getting 2, 3, 4%, and the likes. A mutual fund, you get 11, 12. Our own mutual funds doing about 11%. You can enter anytime you want. You can withdraw money anytime you want. It's easily accessible by our app and all of that. So, but I won't dwell too much on this one because I want our mutual fund people to actually talk about it. So this slide just shows the power of compound investing. So basically, when you invest the money, like say in the mutual fund at an X amount, if you don't take out that money and you reinvest the money the next year, your interest compounds, based on what you've earned, and it goes higher. The whole idea of this is so that people learn how to invest money. Over time, people have lost a lot of money because there are a lot of Shylocks, a lot of funny companies out there giving people unrealistic returns. Somebody calls you and says, I can give you 5%, and you're 5% every month, and that amounts to 60% in a year. What kind of business are you going to do that you're going to get 60, 50% in a year, and you're going to be sure that your money will be safe? So the whole idea is for people to know that rather you put your money where it's safe, where you can sleep well. You can sleep and know that this money is not going anywhere. Not that you wake up tomorrow morning and then somebody has run away to Canada with your money, and then there have been funny stories like that. So the whole idea of us bringing this presentation to you guys is that people should learn how to invest and keep their money. I liken the stock market to somebody who buys land in Lagos. If you buy land in Lagos and you go and sleep, you come back in 2 years' time, you will have built house on top of it, and there's nothing you can do about it. But when you buy land, you are on top of it. Look, who's selling this land to me? I go to Alausa, whatever, I go and find out my papers are all right. I go there, I put a fence around it, I start building it. Little by little, you have a structure. Same thing applies to when you're investing in the capital market. You don't just give somebody money and then you go away and sit down and expect the money to grow. You also have to be interested. Why am I buying MTN? Why am I buying any bank? What is any bank doing? Okay, I heard this information about Dangote Cement. Olani, why am I not buying Dangote Cement? Do you think it's a good buy? Do you think I should exit? You know, so the whole idea is just for people to be educated and understand how the stock market works and how investing works in general. So the next slide is okay. So how to start investing? Of course, with us, you can open a brokerage account and you can open a mutual fund account. We have our app. You can wake up any time of the day to look at your app, to look at your investments, to see whether you're in money or out of money or whatever. So the first way to start is open a brokerage account or a mutual fund account. Like I said, carry out your own sort of research. It's always better when you can come and meet an investor and say, look, this is what I read about, this is what I heard about this. Is it a good investment? And then your investment advisor too can come in and say, okay, look, I think this is what you should do, or this is what you shouldn't do. At the end of the day, we're all advisors too, and the market dynamics, you know, can scatter a lot of things. A couple of days ago, CBN released a document about banks reducing their exposure to FX, and the market bled. And I had a client who had Transcorp, and the market went to 11 naira 80 kobo, and he called and he was panicking. And I said, why are you selling Transcorp? Is Transcorp affected by the banks? The banks that you're even talking about, even if they reduce their FX, the Zenith, the GTBs will still report billions of naira in profits. Why are you selling? And he was okay, Mr. Alani, if you say so, I shouldn't sell. And as of yesterday, Transcorp went back to 15 naira 40 kobo. He had to call me to say, look, I'm going to send you a lunch. In fact, I'm going to remind him this afternoon, you send my 10 or 20,000 naira because he would have lost more millions if he had panicked and gotten out at 11 naira to kobo. So you also need to do your research. You can start small, for those of us that, okay, 20,000 a month, 50,000 a month, put X amount into my mutual funds, put X amount into my stock, into my equities account. And if you are a risk adverse person, you can invest more in the mutual funds. We have a balance fund, which Jennifer will talk about. If you don't know what stocks to pick and you want a situation where there's a mixture of stocks and money market instruments together, or fixed income instruments, we have a mutual fund that caters to that. And then the last one, download the company's mobile app and monitor your investment by yourself. I cannot monitor your investments for you. Going to heaven is everybody's call. I can't go to heaven on your behalf. Likewise, you also have to learn to monitor your investments by yourself. Next slide. Okay, so the next slide now. So these are just some of the tips for 2024 for those of us that want to play in the stock market, because I am a stockbroker. So purchase stocks that are fundamentally sound. Without saying too much, I know all this, for example, the stocks I mentioned here, we all know Zenith Bank, GTB, Dangote Cement, MTN, Flour Mills. No matter what you want to say about Dangote, he has created a lot of jobs in this country. If Dangote has a problem, Nigeria has a problem. If Dangote is doing well, Nigeria will do well. So I don't even need to talk too much. I'm sure everybody in this meeting knows something about Dangote. MTN too, Flour Mills, GTB, Zenith Bank are one of the most capitalized stocks in Nigeria. They are part of the best performing Nigerian stocks. So, I mean, you should also make sure that the stocks you are buying are stocks that have been consistently been reporting profits and consistently have been paying dividends. Diversify your portfolio, right? So a lot of people tend to buy banking stocks and then leave the other sectors. You can mix it up. You can do a bit of telecoms, you can do a little of banking, you can do a little bit of insurance, you can do a little bit of consumer goods. You can do Nigerian brews, you can do Guinness. Yesterday was Friday. I'm sure half of us here went out yesterday. Know how. Somehow, somewhere, we took Heineken, we took Nigerian Guinness and Nigerian products, Nigerian brews products. So you can diversify your portfolio. The reason why I'm saying that is, imagine a situation, maybe banking sector, maybe because of one ruling or whatever, this FX exposure, for example, now drags down the sector. And then telecom and then industrial goods, like Dangote has gone from almost 300 to 686 naira. And imagine you have bought Dangote at 300 naira. By now, your portfolio will be doing well because Dangote has gone from 300 to about 600, which is about 100%, over a space of 2 weeks. You can also aim to buy good stocks that pay dividends. So sometimes when you play the market, you get burnt. And that's the truth. It's like playing football. Chelsea cannot win all the time. For all the Chelsea fans, Arsenal cannot win all the time, even if you put Messi and Ronaldo in the team. There are going to be days they lose, there are going to be days they win. The prayer is that you have more wins than losses. So you aim to buy stocks that pay dividends, because if you get stock, maybe you buy a GTB at 15 naira, now it's now 14 naira. You won't sell because of you might lose money, but you can keep it because you know that over time GTB will pay a dividend of 3 naira, 4 naira. And by the time you collect 3 naira, 4 naira in like 3 or 4 years, you've actually made up for that 10 naira difference. And then when the opportunity comes and maybe GTB now crosses 15 naira, you can now exit. So in a sense, you haven't lost money. Like I explained earlier, you can look to buy growth or value stocks. There's some undervalued stocks in the Nigerian market. Things are happening, things are evolving. For example, we have mining stocks, multiverse and the likes. For a long time, multiverse was at 50 kobo. Now, multiverse is 15 naira because of this new dispensation looking at mineral resources and all of that. Transcorp was at 50 kobo for the longest time. Only Magic has entered it. Transcorp is now 15 naira, 40 kobo. So there are a lot of value stocks that are still in the market, and the more we get information on these stocks, we'll definitely let our clients know. Don't panic when there's a downturn in the market. So tomorrow now they come and say Dangote and whatever are fighting, and then the stock market is going down. Then all of a sudden you two now start panicking. Billionaires are fighting. You two, with your small money, you're exiting because billionaires are exiting. No, the best thing is to call a financial advisor. Look, Niyi, look, Chisom, look, Mary Jane, why is the market bleeding? Oh, this is the reason. Does it affect my portfolio? What do you think I should do? And from our own experience, because we look at the market and we get more information, we can tell you, look, just hold on. Survive this bloodbath. This thing will come back up. The period I said the banking stocks went down, then it went to 35 naira. As that yesterday, then has gone back to 40 naira. So people who are panicking and are sold are lost. People that called and said, okay, then has gone 35 naira. Let me even averaged down my cost and I bought more at 35 naira. Today, I've averaged down their cost. So always make sure you get advice from financial advisors. The last point is don't get greedy. If you have like a set target that, look, I'm going to make 10% and then get out and buy something else. Once it gets to that 10%, exit. Let somebody else carry the headache. Don't say I've got it to 10% and then you now say, hey, I got 10%. Hey, I want to make it 20%. I know people who bought Dangote cement at 170, got to 500, and the client said, no, I want to get to 1,000 naira. I want to get to 1,000 naira. It doesn't make any sense. You made over 200%. Why don't you take out your money and let's do something else with that money? It brings more income for us and also makes you happy that you actually made money and you've won something. So I think this is my bus stop. Thank you all for listening. I think the floor is open for questions. Anybody who has questions, please ask. We're all learning here. We'll try our best to answer your questions. Thank you very, very much.
Thank you very much, Nee. That was an amazing session. So key takeaways, I don't know if you guys have your paper and biro somewhere. Key takeaways for me was diversify your income, don't panic, don't be greedy. So do we have any questions? You can drop your questions in the chat and we would definitely try to answer all questions before the end of the session. Okay, so let's move on to the next speaker. Our next speaker will be coming from the Quantum Zenith Asset Management team. Her name is Jennifer Ogidi. Jennifer, you have the floor. Thank you.
All right, thank you, Mary Jane. Thank you, Olani, for that robust investment talk. I have learned a lot as well. I would be talking about our product offering for the asset management team. Please, next slide, Mary Jane. Okay, so the asset management team, we basically do more of mutual funds and other funds. So what are mutual funds? Our mutual funds are suitable for retail and institutional investors who require current income, value liquidity, and the safety of assets. And investors get benefits to attract returns from pulling investments together. Do you know, with as low as 10,000 naira, you can get started on our mutual funds? Yes, you heard me right. With as low as 10,000 naira, this is a more retail kind of investment. Mutual funds are retail investments, so it's for everybody. Everybody can key into this kind of investment. So one of the investment mutual funds we have is the Zenith Money Market. This is a mutual fund that puts together investment from different prospective investors to buy money markets securities like the FGN Treasury Bill, commercial papers, fixed deposits, and bank placements. So what I mean is that the Zenith Money Market will pull out investments from our prospective investors who are looking to buy come together to buy investments, and we put these funds into securities like the FGN Treasury Bill, commercial papers, big fixed deposit, and bank placement. And at the end of the quarter, we distribute your income distributions to every customer depending on how much you have brought into the investments. So in investments, the higher your funds, the more income you get at the end of the day, more interest rather. It is a yield based, and the yield changes on a daily basis. It is weighted average yield on all investments. What this means is that yield changes daily. It is not a fixed kind of investment. Now I'm speaking to the Zenith Money Market Fund. It is not a fixed kind of investment. The yield changes on a daily basis, and it is volatile in nature. That means, okay, today we can tell you when we look at the market, we see that, okay, the market is saying that the yield for today is as at an 11.5. Tomorrow may come and its yield is either going up to a 12% or it's reducing back to let's say an 11.94%. So it is not a fixed kind of investment. How the minimum holding for this period is 30 days. So it means that 30 days is the minimum you can keep your funds with us. After 30 days, you are liberty to choose if you want to to take out your funds, or you want to leave it for a longer period of time. So it all depends on your risk, on your investment goal. Whatever investment goal you want to, keep your funds for, you have the liberty to keep it for as long as you want, and you just daily, accrued interest on your investment. And the fixed it is a flexible investment, and the capitals are preserved. That means, okay, like I said earlier, that the yield are not fixed. They are volatile in nature. They change on a daily basis. So however the yield is changing, it does not affect your capital. That's what it means, that your capital is preserved. Let's say, for example, you brought 100,000 naira and started this investment in the money market fund. What if the yield is changing daily? It just affects your interest that it will be accruing for you. Your 100,000 naira is still preserved. Please, next slide. Then we have another mutual fund, which is called the Zenith Income Fund. Income fund is a risk medium open-ended mutual fund that invests in federal, state, and corporate bonds that are investment grade and share a broad range of money market securities. So these are fixed income investment. Now, the money market, the income fund is a fixed kind of investment. So this is not like the Zenith, the money market investment that is not fixed. This is actually a fixed kind of investment, and the funds provide attractive returns for conservative long-term investors. So people that have that much funds that want to keep for a very long time, this is the kind of investment you can also diversify into. Units of funds are purchased at offer price and redeemed at the bid price. The bid price and the return from the funds are shared on pro rata based on each investor's contribution. So there's an underlying thing that the mutual fund does for every investor. So how the kind of amount of funds you buy determines what will be shared on the shares at the end of the quarter. So it is not something that you put a 10,000 naira and you're expecting a miracle and you want to have 150,000 at the end of the day. No. So it means that if you start up with a 10,000 naira, you should keep growing your investment so that at the end of the day you can match up with somebody that also started with a 1 million naira. That is how it works. Our minimum holding period is 180 days. So this is long-term kind of investment. Please, the next slide. The Zenith Balance Strategy Fund. This is a mutual fund that typically contains a component of stocks and bonds. You heard my colleague Nii talked about stocks and bonds. So what we do in the balance strategy funds, we now make it more retail for people like you and I. These are components. This kind of investment contains a component of stocks. So we are putting your money in stocks and bonds as well. They have a long-term growth using a combination of asset classes to moderate volatility. So we also have some asset classes to moderate the volatility of this kind of investment. It's a medium to high risk open-ended mutual fund that invests in diverse selection of companies listed in the Nigeria exchange, as well as federal, state, and corporate bonds. They are investment grade and on a broad range of money markets. So this kind of investment is just not open to the public just like that. So there are some listed companies in the Nigeria exchange that this kind of investment should be invested in, and as well as the federal, state, and government bonds. Units of funds are purchased at offer price and redeemed at bid price as well. The return from this investment, like I said, there's one particular thing about common with the mutual funds. However, whatever you bring to the table is what you get at your return at the end of the day. Minimum holding period is 180 days. So this is also a long-term kind of investment. Please, the next slide. Okay, so we have the Zenith ESG impact funds. These are ethical based investment for sustainable growth and development of the economy. They are investment on environmental, social, and governance development. I know people will be like, oh, I thought ESG is basically for high net worth individual and institutional investors. Well, this is what we do here in asset management, we bring the retail market to you. So what we thought it was that it would be nice that we also, other individuals can also partake in the sustainability, growth and development of the economy. So we decided that it is best that we also bring the ESG to a retail market. And that is why you can also, grow from invest in an ESG kind of investment. These are equity-based investment, is a medium to high risk open-ended mutual fund, and invest in equities and government bonds. Like you already know what equities and government bonds are. So this is what the ESG does, the kind of investment that the ESG brings to you. Unit of funds are purchased at offer price and redeemed at bid price. The return for funds are shared on pro rata based on each investor's contribution. And also the minimum holding is a 180 days. Okay, so I have just spoken to the four mutual funds that we have here in asset management. And the beauty about our mutual funds is that you don't only stop at giving us your bringing in your 10,000 naira, or like the startup fee is a 10,000 naira. You can top up at will. So let's say you have you have a goal, you want to maybe japa, you want to do something that's like something that you need to keep funds for. So what you do is, if you start up with a 10,000 naira, depending on your income, so at will you can top up at any time as low as 500 naira. That is how much we have brought it down to the retail part, that anybody can actually key in. It doesn't matter what you do for a living. You can actually start up an investment in government securities and the like. So my colleague will tell you how you can navigate through the app and the rest of them using starting up this investment. So we also have other funds in the asset management in the discretionary portfolio. So we have the Quantum Zenith Naira portfolio. We call it the QZMP portfolio. These are basically for high network individuals and institutional investors. Minimum investment is 100 million. The startup investment fee is 100 million. The interest is paid back end or upfront. Rate is based on negotiation and tenor. So you will tell us your tenor and we negotiate on a rate for you that suits your tenor. Redemption before maturity, we attract a minimum penalty of 50% of interest accrued. So let's say you decided to keep the investment, you started up this investment, you told us your tenor would be a 90 days, and at the end of the 30 days, you are coming back to ask us for your funds. Okay, yeah, we'll give your funds to you back, but at the end of the day, there will be a penalty charge, which is a 50% on your accrued interest. Now, your capital is still preserved. It's just the interest that you must have accrued from the first day of startup to the 30 days of at when you were asking us for the money back. So we also have Quantum Zenith dollar portfolio, and this is strictly dollar. So we don't take, like, I know some investors, some counterparties would say that so investment house would say that, okay, so you can actually put a naira equivalent of the dollar that you want to invest. But here in Quantum Zenith Asset Management, we do not take your naira, we take your dollar. Like I said, it's also for high network individuals and institutional investors. Minimum investment fee for this kind of investment is a $200,000, and the interest is paid back end. Rate is based on negotiation and tenor, and you already understand what it means, that rate is based on negotiation and tenor. Redemption before maturity will attract a minimum penalty of 25% of our interest accrued, like I've explained earlier, for the Naira portfolio. So if you come back and say you want to take your fund when it's not your mature date, be ready that you would have to pay the interest, a fee on your interest. So basically, the money markets, mutual funds are like, you just have to start investing. There's no explanation to it. My colleague had already said that the bank will not give you as much interest as the mutual or the investment or mutual funds would give to you. Let's be honest, and that's the truth. So I did not know so much about this until I started to work with asset management, with Quantum Zenith Asset Management. I realized that, oh wow, all my monies would have done a lot for me before now, but all the same, it is not too late to start. You can start small, you can start now, and don't be greedy. Thank you so much. Thank you. So if you have any questions, please feel free to ask. Thank you.
Thank you very much, Jennifer. That was an amazing slide and speech. So my takeaway from this, I don't know if you guys have some takeaways that you will want to point out. And if you notice, there's something that's consistent between what Olani said and what Jennifer said is when you start investing, you have to follow up. Don't just keep your money and expect it to just be there working for you. You have to follow up. Like he gave an example of, when you buy land in Lagos, you have to, make sure you get your papers, be checking it, build fences. If not, what do you call it? When you come back in the next 10 years, maybe someone else has built house on top of your land. So you have to follow up with your investments the same way. Okay, do we have any questions in the chat?
Emmanuel has been responding to the chat. So let Omo go next.
All right. Okay, so our next speaker, okay, thanks. Our next speaker, Omosomi, she'll be speaking about trustees, how to get started with starting a private trust.
Okay, thank you, Chino. So good morning, everyone. I'm just going to talk about a bit about what we do at Quantum Zenith Trustees. I'm not going to take much of your time. So I think let's all start with trust. I'm sure not a lot of us know what trust is. A trust is a fiduciary relationship in which one person, the trustee, which is us now, owns the title to assets, funds, or property, which would be called the trust fund or the trust property for the benefit of another, the beneficiary. Okay, so the beneficiary can be you, the beneficiary can be your kids, the beneficiary can basically be anybody. So it depends on you. And this is created by a declaration of trust, which will be called the trust deed. So under a trust deed, the settlor or the donor or the grantor, which is you now, can also utilize the funds during assets during his or her lifetime. Because I know there's this myth, everybody thinks a trust is you're setting up in preparation for when you die. No, it is not what it is, basically. So as a settlor, you have the right to revoke the trust by either withdrawing the assets or by amending its terms. So you can decide that all this money I've been saving for beneficiaries, okay, I need this money, I want to revoke that trust. You have the right to do that. You can amend your terms in according to provisions of the trust deed. Even though you've given us this list of beneficiaries, you can decide that I want to remove or I want to add. You can decide this person is I no longer want to cater for this person's needs, or this person doesn't need me to cater for their needs. So you would like to remove the beneficiary from the list of your beneficiaries. This is also called a living trust or a living revocable trust. So the next slide, please. So our private trust offerings are Quantum Zenith Trustee. We help manage clients' private wealth. We craft legal structures for wealth preservation, wealth protection, wealth transfer. You can set up, a typical client can set up structures for themselves as beneficiaries, like I said earlier, for yourself or other named beneficiaries. The trust can operate both during and after the lifetime of the settlor. So our retail products include the Zenith Education Trust, the Zenith Individual Investment Trust, Living Trusts, Estate Administration, and Endowment Trusts. But I'm just going to basically talk on two of the major trusts we have, which is the Zenith Education Trust and the Zenith Individual Investment Trust. So first of all, what is private trust? What constitutes private wealth? Think of all the assets that you own, your private home, other real estate, your bank accounts, your investments, retirement plans, funds, your life insurance policies, collect personal belongings, business interests, equity. A private wealth plan just effectively means you are reorganizing all your assets and wealth to ensure the creation of a top-notch investment plan. You are ensuring seamless transfer to the intended beneficiaries and even for yourself. So you're just ensuring that your financial legacy is created and everything is in tip-top shape. And at Quantum Zenith Trustees, we help you do that. Next slide, please. So our first product is going to be the Zenith Education Trust Plan, which is also called the Z Plan. So this is designed to just basically help you set aside funds on a gradual or lump sum basis for the education of your children or wards. So this is your children, your wards. You can decide to set up, you can decide to set aside funds for children or family members, church members, anybody, basically, for their education. The funds are invested on behalf of the named beneficiaries. The cost of education is paid to the designated schools, parties, or accounts in line with your instruction, which is the most important thing. Whatever we do at Quantum Zenith Trustees is going to be in line with the instruction that you have set at the appropriate time. It will also cater for their well-being and maintenance. You reserve the right to state at what age your child or ward would be entitled to the residue of the trust or assets upon graduation or attainment of a certain age, whichever is acceptable to you. All these arrangements are going to be documented in a legal document, which is going to be called a trust deed. Please, next slide. So the features, the no minimum contribution is required. Payments can be monthly, quarterly, semi-annually, annually. Its minimum maturity period of 5 years. It allows individual preferences in choice of investments. Payments can be made in checks, bank transfers, warrant, direct debits. Next slide, please. So the benefits of Z Plan. It allows for flexibility in carrying out your request with or without your presence. For instance, payment of school fees, amounts to be paid. So basically, it removes the yoke of you being burdened by having to remember, oh, I want to cater for my children. I also want to cater for my brother's children. I want to cater, and maybe in a situation where they go to different schools, there's secondary schools, universities, and so we help you. We give you that flexibility. The payment of the school fees to the schools, the amounts to be paid, it allows you freedom to do other things. In the event of death also, disability or absence of the settler, the funds will be readily available for the payment of school fees without recourse to the cost and time associated with processing of wills, probates, letters of administration in order to allow access to the funds of the deceased. So this, in a scenario where there's a death, and then we all know the process of having a will or not even having a will, going through the courts, going through probates. So you have, and then you have this trust fund that you've set up for your beneficiaries, and your children are able to access these funds without going through all that drama, or they have funds that they can use, that they have access to before the courts are done with whatever they need to do, whatever legal process they need to go through. So the trust fund is separate from the settler's estates and is protected from creditors. It's also tax-free. Next slide, please. So for this Zenith Education Trust Fund, it's just basically giving you the freedom to set up, to create a plan for your children, to make sure they are catered for, even when you're alive and when you're not alive. So nobody stresses them. And when it removes that problem of when somebody dies, and then there's this problem of even looking for money to do the burial, looking for money to pay the school fees. Everything is just at a standstill. So we'll move on to the Zenith Individual Investment Trusts. So let's know, we're always talking about, I know people are always talking about how every time set up trust for somebody, save money for this student, save money for this person, me, uncle, what about me? So we also have this plan is to help you up your life in future, especially retirement. You prepare for a rainy day. Sorry. So next slide, please. The purpose of the ZITs is largely for yourself, bearing in mind that in addition to what your employer will do for you when you retire, or what you will get from retirement savings account, you will have something in addition to support you. With ZIT, you are the beneficiary. But in case anything happens, then the benefits of the trust will go to your spouse or children, as you may direct to us, your next of kin. All these arrangements are also documented. So your food for thought, are you depending on only one source of income when you retire? Have you thought about the different sources of income you can generate apart from your pension scheme? Wouldn't you want to give yourself a separate target to achieve that dream plan? You should be aware also that your estate does not have to go through probate, and your family does not have to worry about the immediate need for cash. Like I said, if you have established a trust account where there are secondary beneficiaries, like I said earlier, your family is catered for. Yeah, they're not, the court is there doing their own thing, but they also have something that will tie them over till they get there. Next slide, please. So the Z plan, there's no minimum contribution is required. Payment can be monthly, quarterly, semi-annually, annually. The minimum maturity period is 2 years. Payments can be made in checks, bank transfers, warrants, whatever is comfortable for you as an individual. So the benefits of the trust fund, the Zenith Individual Investment Trust. The trust fund can be disbursed as annuities or a lump sum payment to the beneficiary after a predefined period in the event of death, disability, or loss of job as stated in the trust deed. So you can decide that I want this money to be paid in this particular amount to be paid monthly, or after 5 years, after 10 years, pay this amount, the lump sum, to me or to a named beneficiary, whichever works for you. It allows for flexibility in carrying out your request, with or without carrying without your presence, payment of fees for designated projects, school fees. It guarantees wealth creation. And this is, like I said, for the Z, it is separate from the settlers' estate and is therefore protected from predators. It is very cost effective and it reduces administrative costs. So basically, the Z plan and the ZIT plan there are 2 offerings that we offer our Quantum Zenith trustee that I feel it is very beneficial. I know a lot of people don't. It's not only about making wills, and you can actually set up something when you are still alive. You don't have to wait. You're not setting up something for when you die. It's nobody, and obviously nobody wants to die. Nobody wants to think about when they're no longer alive, but I think it's something that we as individuals, and you can start at any age. Like I said, you can start at any age. It doesn't have to be, your beginning process doesn't have to be for a beneficiary. Like you're not married, you can start them. By the time you start as an unmarried person, when you get married, when you have children, you can change the instructions of the trust deed. It's flexible. You can change it. Oh, now I'm married, I want to add this, I want to add so and so to this person, to this trust deed. In events you are not even getting married, it's your own. It's just more, it's a different kind of financial plan that I feel is needed for everybody. So I hope you can start your journey with us today towards building your financial legacy. If you have any questions, please feel free to drop in the chat box. Thank you.
Thank you very much, Omo. That was an enlightening information about setting up private trusts. Most of us, I'm sure we don't know about having a trust, even though we're not dead, setting up trust for later in the future, or planning for our kids that, okay, when they reach a certain age, they can have access to some money that we set aside for them, whether we're alive or dead. Okay, thank you very much. If you have any question for almost me, you can drop it in the chat box and the representative would answer you. So moving on. So my colleagues, they've talked about what we offer at Quantum Zenith, and I'll tell you how you can get started immediately on the Quantum Zenith app. So you can get the Quantum Zenith app from your Google Play Store or from your App Store, or you can even scan the QR code on your screen right now to get our app. Whether you choose the asset management model to get access to our mutual funds, or you choose the securities model to trade stocks directly from the NGX trading floor, or you choose the trustees model to get in touch with our trustees people on how to set up a trust. You have to put your personal details so that we can get to know you. Once you put your personal details, you can start investing immediately. So I'll just show you some benefits of using the Quantum Zenith mobile app. So you have automatic fund identification, no need to send us mails saying, oh, I made the payment. We automatically get notified that you have made payment. You can trade directly from from your phone. So imagine using this example, maybe you want to buy MTN at 25 Naira and you have access to the Quantum Zenith mobile app. Imagine you are in your office or wherever you are from the comfort of your home, immediately you buy the MTN stock. But I'm just saying, maybe you now send us a mail and everything. By the time it gets to us and we treat, probably it's not trading at that 20 Naira. So you can easily trade immediately from your phone. Then the convenience, you can fund your account immediately from the Quantum Zenith mobile app with just a few taps on your full screen. No need to leave your home or office or your phone. Then also on the securities platform, no stamp duty payment, no need to pay extra for the stamp duty. That's actually a cheat code while buying stocks from the securities model on the Quantum Zenith app. So download the Quantum Zenith mobile app today and get started on your financial goals. So do we have any questions? Can be for me, can be for any of the speakers that have spoken before we can call it a day. All right, so in the absence of any, I know that people's questions are being answered in the chat box. So you can actually reach out to us. You can reach out to me for more information, Jennifer, Omosomi, or me for more information. And I'd also like to add, if you want us to contact you after this webinar, we'll be dropping a link in the chat box so that when you feel it, we can reach out to you. We don't want to bombard everybody with emails. You have to specify, okay, I would like for you to contact me after this webinar so that I have more information, more questions. I want more directions on what to do, on how to get started. So my team will be dropping a link in the chat box for you to put your contact details and we would follow up with you. So any questions?
Okay.
All right.
Okay, Mary Jane. Yeah,
Yes.
thank you very much. You've been a wonderful host. I want to thank everybody for taking time out this Saturday morning. I know a lot of people are on one parties. Some people should have gone to do sports this morning, but you sacrificed that to spend time with us. We really, really, really appreciate it. We hope we've answered your questions. Like she had rightly said, you can reach out to any of us at any point in time. But I think the best way to even start now is just go to your Play Store and even download our link, so that you can even start from there, and then, we can help you open the account. I think it's actually a great one to look. Even the trust that Mo presented this morning was quite enlightening, and I realized that, look, it's necessary we do these sort of things. I know people are complaining about, my daddy didn't leave stuff for me. Now you have the opportunity to actually leave stuff for your own children. And, a lot of us are working class or about to start working or close to our 50. So I think we should all take this plan. We really appreciate everybody. The Google form that she said, we want you to, if you want us to add you to our emailing list and you send investment advice every once in a while. That's why we created this. We don't want to bombard people with emails and people start complaining that we're just clogging up their box. So if you're really interested, I would advise that you put your email. Thank you once again. Really appreciate everyone. Have a lovely weekend.
All right. Thank you very much. Have a lovely weekend. Bye.